what's going on, everybody? Christopher Inks with Texas West Capital coming at y'all live here just after 11 a.m. Central Standard Time on Friday, NFP Friday. Oh my God, the world is dying. The sky is falling. We're down so far. Not really. But so many of y'all out there acting like it. What the heck is wrong with you? So anyway, I've got Fibble with me today. So, he was able to make it in here, and he was messing with me. He was like, oh man, I may be late. I may be 15, 20 minutes late. Dude showed up on time. So, he's just messing with me. You know how it goes. So I thought I was going to have to entertain y'all for a while, do a little dancey dance, sing a little tune, maybe something like that. Nope. Y'all don't get any of that. You get none of that. All right. And listen, show Fibbo some love, guys. Hit the thumbs up, hit the like, subscribe to the channel. Share the link, guys. Share the link. Whatever you're watching this on, whether it's X or Facebook or Twitch or, wherever the heck else we put this thing. Do me a favor. Hit the share on that link there. So other people can follow along and they can be introduced to the greatness that is the great Fiboswani. And see, I'm just building him up here. So he really has something that he has to live up to when he comes on in a minute. If you could see him now, he's having a great time laughing to the back there, but it is what it is. So anyway, make sure you guys do that. We're going to talk about Bitcoin and other things real quick here before I bring Fibbo up. Well, actually, you know what? Let me bring him up here and we'll talk real quick about the jobs and then we'll get into the important stuff. What's going on, Fibbo?
What's up? What's up? Yeah, and I'm sitting back here laughing because I feel like a comedy guy, like a stand-up comic, getting ready to come out. Everybody's like, "Here's the greatest comedy guy," and blah blah blah. And he gets out and he just freaking bombs, and everybody's no laughter, no nothing.
That's exactly why I did it.
No, doing well.
Hey, for those of you that don't know, Fibbo's with us over there at TWC, and absolutely fantastic guy to follow. If you're not following him already, if you're not listening to him already, he's just got a ton of experience between the both of us. We got something like 50, 60 years of market experience. And so
we're pushing 60. I think we're getting up there pretty good.
I think we're both over 50 now, aren't we?
No, I meant like in years together.
Oh, I just mean in years. I just mean in years old.
Oh no, yeah, no, I'm 55, so I'm halfway to 60. So
man, you got me way beat over there.
But I am a good looking 55. That's what I say.
There you go. If you think so, hit the thumbs up. Let him know that you guys agree that he's a good looking 55. I'm maybe a mediocre at best 50, going on a 51 here, but I'm still here. I'm still kicking. It's all good.
That's right.
Thankfully, listen, here's the thing, man. This is Texas and it gets hot. I mean, it's just the way it is. We've got, pre-summer, summer, midsummer, hot summer, fake fall, summer too. This is Texas, what we do, right? We can kind of hang around that 95, 105 degree area. And my AC here in my office, I've got this big office about, 650, 700 square feet. And I've got this separate AC in this thing, and it froze up yesterday. It's been working so hard. It froze up yesterday.
Oh, wow.
And so I'm like, it was starting to get warm. I'm like, all right. So end of the day came yesterday. I turned it off. I'm like, man, I hope this thing thaws out by today. And it did, thankfully. So I'm comfortable, a bit cool in here. So yeah. But anyway, hey, listen. Nobody really probably cares about that, but hey, we're here to give you the things you don't care about, just to see if you stick around for the things that you do. We did have the jobs report came in today. What a jobs report. First of all, we were looking for 104,000 jobs. We came in at like 75, 78,000, something like that. I think it was 75,000. So we were soft on that, but man, oh man, did you see those revisions? 258,000 revised down over the last 2 months. So what does that mean? Well, that means this month at 70 somewhat thousand, we were more than June or more than the previous month, which was after the revision down of 125,000, where it was like 14,000. So, we're above that, but man, oh man. So we're starting to get the slowdown here, which means what? It means there's a much greater chance we're going to see a rate cut coming in September, as we've been looking for since the beginning of the year.
So yeah, I looked up the CME tracker. It's up to 80% for a cut.
Wasn't it like something like I don't even know, 20 or 30% like yesterday? I
Yeah,
think.
it went up a lot just today.
Yeah.
And if you're playing the Poly market, I think Poly market was up to like 70% probability of a cut. So
Well,
if you're a gambler and you want to play the Poly market,
I'm not a gambler. I'm in the markets. That's it. Strong risk management. That's what I teach and talk about every day. I've been to Vegas one time in my life, and that was a few years back when I spoke on Scott's stage over there for an event that was over there.
nice.
And I couldn't get through the casino fast enough. Just wasn't of interest to me. I'd like to have a bit more control over my loss of money. And so, yeah. But man,
Speaking of the job numbers, I've been busy this morning, so I didn't get a chance to really look at them. Did unemployment go? How much did it go down?
So unemployment
or go up? I mean,
unemployment was 4.1% last month, and they were expecting to go to 4.2, and it dropped to 4, or to stay at 4.2, and it dropped to 4.1. This month they were expecting it to slightly tick up to 4.2, and that's what we got. So that was in line. But I think the important thing for people to understand here is that at 4.1, 4.2%, we are still historically low.
Yeah.
Basically, the Fed considers 5 to 6% unemployment, around that, a little closer to 5%, as a fully employed market. And we have been below 5% for years now. It's crazy. It's been one of the longest periods where we've been so low. So, when it comes to the unemployment, I mean, even when it ticks up slightly, we're still so significantly low there. But the revisions were huge there. The revisions that we had, 200.
Yeah, that's crazy.
God.
And the one we just got today will probably be revised also.
Yeah. At the rate those last two wait, I mean, probably. You
never know, but yeah.
So average hourly earnings though, which is something we do like to watch. They increased 0.3%, which was what was expected. So the yearly gain, though, for the hourly earnings was up about 3.9%. So it's slightly higher than was expected. So even though we have the job slowdown and whatnot, and the unemployment ticking slightly up, the average hourly earnings are going up pretty well still as well. So, I mean, at least we've got that, and that's good. And that's something that's important that the Fed watches as well. But let it be known, the Fed, as I continue to tell you, is reactionary. They are not proactive. Everything they do is based on numbers that have already happened. So they're always chasing the ball. We go, oh, Jerome's late. And, oh, man, Trump's taking him to town on social media. I'm just like, geez, this guy says whatever. He DGAF, man. He does not give a about what he says, Trump. But, he says, oh, too late, Jerome, and all this stuff. And the reality of it is every Fed Reserve chairman is the same way. They're all reactive. They're all doing what they do based on numbers that have happened versus what, is maybe happening in the future. But do they really have that much control over the market? No, right? I mean, we watch what? We watch charts, right?
Indeed.
Right, there you go, Phil. But there you go. You're getting there, man. You're getting to my energy a little bit. You're starting to feel it.
No. I mean that's exactly right. I mean, both of us come from a social mood kind of background. When we kind of look at charts and stuff, and if you follow that, then you know that the Fed follows the market. The market doesn't follow the Fed.
There you go.
And until you really kind of swallow that, which is kind of hard to chew and swallow sometimes, because when the Fed numbers come out and the market goes nuts and everybody has those knee-jerk, emotional reactions, it really comes down to, does it change the actual sentiment, social mood, trend of the market? If it was going to happen, most likely the market probably would have already reacted to it, of them. And then the Fed's just catching up to what was happening in the market. But
exactly.
But I know that's a hard concept, especially when I first started, reading up on social mood and trying to figure out all that. And I'm thinking, well, this is just crazy thinking. but then again, I'm like, wow, it actually makes a lot of sense. So
yeah. Because at the end of the day, what the easiest way we know how people are feeling in general is, are they putting money into the market or taking it out? And why is that? Because if they're putting it into the market, they believe that things are okay. They don't feel really worried. Risk on, right? Or risk off.
Yep.
Yeah, there we go. And if they are feeling concerned or whatever, they're pulling the money out. They're not adding more in. They're shorting something like that, right? So risk off, or risk on. Geez, whiz, mom, can't get my thoughts straight here. But anyway, yeah. So when you think about it, the financial market, which by the way is not the economy, folks. The financial market is not the economy. You need to understand that. But when you get that, get that understanding in there, then you go, yeah, well, if people are scared, obviously they're not going to be putting money into a risky place like the markets, right? And if they aren't so scared, well, guess what? They got extra money. Guess where it's going? Into the markets. So, man, oh man, I think I want to keep talking here because Joshua keeps begging for charts, and I think it's fun to kind of just push him a little bit there and see how long he does until he breaks, maybe.
Oh, we're going over charts?
No, I think that's what they're expecting. I said Fiboswani. I think they associated that with charts, but maybe we can develop a new Fiboswani persona today, chartless. I didn't say shirtless, I said chartless.
I don't even know what that would look like. I mean, I've had so many charts in my face for the last 25 years. I wouldn't even know how to react without a chart.
What would you do, right? Be like, I don't know. What's retirement? It's that thing I do when I'm dead, right?
Yeah, exactly.
But yeah, let's go ahead and pull them up here. Let me see. I'll pull your chart up there, and I'll get us positioned a little bit better here. And you can walk people through. If you want to zoom that in a little bit so I can see a little bit better.
I'm not zooming nothing. No, I'm just kidding.
He's like, listen, you got the charts. I ain't zooming it in, though.
Sometimes it's hard to zoom in because I gotta give the whole picture, but I can zoom in a little bit here.
Yeah, just say the levels. They need to listen.
Yeah, true. All right. So I tried to zoom in a little bit, but I need you to kind of see this whole bit here. What we're looking at here, this is the 4 hour on the BTC. And this is where the bear zone hit back here on, what was that? July 25th. And that's when it went into the bear zone and this large red candle on the downside here. So when that happened, you had to go back to the previous shallow fib here to get the three settles, but the three settles happened right there. We were in the bear zone. So we've been kind of waiting for this target here at the 61.8% level was at 114,255. And that was the area I wanted to buy while in the bear zone. But as you can see, when it came here, I can move this line over. When you can see right here, this red candle and this low right here that came in at, that low was at 114,750. And my limit order was in at 114,260, which yeah, I missed it. And then it just started to come back up here and got a nice little move going here. But then again, it didn't break back into the bull zone. So I wasn't getting back long into the market. So the 4 hour for me has been in this consolidation, and I've just been kind of being patient and waiting, which is, relatively boring. And I'm sure it's boring for the people in my group too. Like, this is real fun. We just sit here and watch the market go back and forth for like a month. But we rallied up, and it touched the fib extension here, and it really kind of needed to get up above this 120.3 to really kind of break us out. But it fell short and didn't get the bull zone, really didn't get any momentum. Momentum has been really low, but we finally broke up on some momentum here, or the ADX started to increase a little bit, so we can get a little bit more bearish strength. But really not a ton. I mean, it did break down, but we're still in the same range to me. So what happened is today it finally hit the 61.8% level, came down here and wicked right underneath of it, and I got filled there. So the way I approach this is right now I don't have a sell target on it just yet, because when I'm in the bear zone, let me move this back over to where it's supposed to be. When I'm in the bear zone, I'm looking for a buy to kind of establish a foundation to where I'm hoping that a low would establish, and then we would start working our way back to the upside, get back into the bull zone, and then press the position by buying again, and then taking that average of those two buys, and then start to look for take profit targets. So the way I'm playing this is I'm filled here, but if we get 3 consecutive 4-hour settlements under this 61.8% level, which is at 114,255 and a quarter, if that breaks down and gets 3 settles underneath, the full retracement down here at 108.7 is where I have the marked as a target down here. So I would get stopped out, and I wouldn't be buying until it got back down to this level. Because I think right now, if you look at the psychology, that's probably along this level right here. And I'm sure you might even have this level in some of your charts based on how the patterns are showing up. But this area in here is a buy for the way I look at things. But the psychology is I always bring this up. It's trench warfare, right? Yeah. You got a bunch of buyers that are along this line, and the sellers are kind of coming down, trying to build up some strength. But do the buyers have enough strength to hold that line? And the weird thing is like we did get some momentum here being built, but I know this is a kind of a lagging indicator, but it is starting to flatten out a little bit. So that first area of buying makes sense. But if you're a buyer along that line and we start to push through and we get the 3 settles, everybody's going to jump out of that trench, and they're going to go, okay, well, where do we dig the next one? And I'm not talking about the noise that happens, with buying and selling that goes on a daily basis. I'm kind of talking about the mass of buyers that are sitting there. And if they lift up out of that trench, where are they going to go? And a lot of times, if you do some historical analysis on taking some Fibonacci levels and you see a 61.8% break to the downside, you got a really high probability it drops to the full retracement. So that's why I would stop out of that position and not hold it anymore, and then try to reestablish along down here at the 108.7, and then try to establish that as a possible floor before heading higher. But right now we're getting a little bit of buying interest. I like the wicks that we're seeing. I'm seeing some buying interest in here, so that's looking good. Unfortunately, I just don't have a target yet to sell it because I want to establish the long to start there. But the other thing that's on this chart, and I was telling Chris right before we came on, this previous shallow fib here, I know this looks kind of weird, but at 107,204 is a level that I keep moving. I don't have all the lines on here, but this one goes up to the high here at the 123. And it was from a bull zone a while back that even though we went into some bear zones, it was still bullish overall, kept going, all that kind of thing. So for me, that is a very, very strong line in the sand. So I won't mind buying here. But if it ends up getting below this level and settling below that could be a pretty bad thing to where I think we could switch not overall primary bearish market, but a much, much larger correction could be coming into play to where we can get back down to, in this case, you'd be looking at, I don't even know if I have the, I don't have the lines on here. Let me see. So if you got the 38.2, you got to, here, I'll just put the next couple in here. The next one down is 97. So if this ends up breaking here, I'm not looking to buy until it gets all the way down to 97,000 if that ends up happening. So that's kind of my line in the sand of this area. So in other words, if you look at what
you say you're not looking to buy, you mean on the 4-hour time frame or the daily? What time frame are you talking about?
No, just on the 4-hour. Just because because I trade the daily too, but I trade them separate. So I'm trading like this is just the 4-hour. And the other thing is if you just take some absolute fibs and take the low down here that we had at 98.2 and go all the way up to the high, a couple of things you'll see here is you got a 38.2% level right here is kind of the area we're in. And that's why I like the target that I bought right there. Whoop, I moved it by accident there. And then the other one is the 61.8% level at 107.7. So so the same kind of thing, if we end up breaking this and it goes down to, I'm looking at this line here, it's probably hard to see, but the next one's the 107.767, which is still above that previous shallow fib. So so even if you just took this as a move, you got this all the way to move to the upside. You got this whole area in here for consolidation. And if this holds, then it's just going to be this move up, consolidation, and then another launch higher. And that's kind of the pattern that's forming there. So I like that the overall absolute low to high is still matching up pretty well with the support level that's built based on the bull zone of my actual threshold theory is kind of coming together. So a lot of times I'd like to look for those the confluence of different time frames and different Fibonacci levels that you can kind of look at. And when they all kind of bunch together like that, it's going to be a couple of things. One, self-fulfilling prophecy of what everyone's kind of looking at that level. But then again, it's not the exact level when you do some analysis of what others are not looking at. And when those match up, that's a good spot for all the self-fulfilling prophecy people that are just going to buy because they're looking at the same fib that everyone else is. And then you have other people that are doing different analysis like I do or like Chris. And then there's levels that kind of match up to that. And that's what makes me kind of comfortable buying in here. But then again, if it comes down and I get stopped out, that's trading, reestablish the position and kind of go from there. So that's just another, just to kind of a way that I use fibs just to kind of help find those levels and kind of give them some strength or not. But I'm liking what I'm seeing. So hopefully we'll get a little rocket going up to the upside here pretty soon. Yeah. So that's all I got so far is that position on my 4 hours. So the only trades I have on now is the 114.260. I went long here. I don't have a take profit yet, but on the daily, I still have 30% long at 114.67. And so when you look at the daily and we move over to this chart, we're still in the bull zone. We did hit this trend line break target here. Was one of the take profit targets, which actually hit on that kind of little bit of a blow off top there, kind of looking thing. That hit the target, came back down, and we bought the shallow fib again. Now we are underneath it a little bit, but we're still in the bull zone. Momentum's just not there for either side. Yeah, the red negative directional index is increased because we went down a little bit because it's just math. But the momentum is just not there strong enough for me to think that it's going to break into a bear zone on the daily. So you're looking at this 113.342 area on the 61.8% level as a support, not a buying area for me because I've already bought, and plus we've bought from back here a couple of other times, and that's why we got the average of about 114 or so. So if you actually break into the bear zone here and it gets below the 113.352, that's basically my risk at the moment. So the 113 and change with my average being about 114 and change, I'm willing to take a little bit of that risk for the possibility of us rocking back up to the upside and starting to hit some of these upside targets. I have 3 targets here for my 30%, so I would sell 10% at each at 125, basically 125K. There's another one at 132K, and then another one at 151. So and also as we go up and hit these targets and come back out down and hit shallow fibs, there'll be additional targets. Yeah. But for now, based on the patterns that I have going at the moment, those are the 3 targets. Now they can get adjusted and those kind of things, a little bit lower or finding closer targets and those kind of things when you're watching for different levels and those kind of. But right now, those are the 3 levels that I'm kind of looking at. And if you take I don't know if I have this one on there or not, but we'll find out. I'm looking at this move right here. Could be another one. Like you take this one here, and if we get this period of consolidation, we'll go to another move to the upside. So there could be some other levels in here if you'd want to, like this target up here at 151, you can move down to 138 if you wanted to be, a little bit more conservative and take profits a little earlier, which is fine because most likely it would probably go up to that point, come back down and hit a shallow fib, because what would happen is you would move the fibs up with this and say it hit right here. Then you would come down and buy it at 126, and then the next levels would be up in this area, that kind of thing. But overall, I still like it, just coming down a little bit. I know that's kind of funny because you were talking earlier, like oh my gosh, we're down 7.5%. We're all going to die. But it really, we have corrected down a little bit, but it's not a 30 or 40% correction. It's just what I call just basically noise. I mean, I know 7% is a good move and you can make some good money off of it. But it's really just noise because we're in the same area of consolidation, staying inside the bull zone. So to me, it's not too bad of a move to the downside because the momentum's not really being built for the bears. So I'm not too concerned with it just yet. Now, if it is, then I'd be a lot more concerned.
Let me ask you this. You mentioned that
I missed the screen. What came up?
Oh, somebody was just talking about how great you are and how they should, worship you as a god and whatnot. So
oh, stop.
Pretty much. I mean,
well, I thank them.
When you do well and people are mentioning it, you got to be all right with that. You got to be all right with that.
No, I'm good with it. Thank you very much.
But let me ask you this. You mentioned the 113 and change level earlier. And you said if it kind of gets down there, are you talking about a daily close down there or just hitting the level?
A daily close because it has to close below. I have to get a close on the RSI, so it'd have to close below. I know this number moves as the market moves, but right now it's at 113,344. So if it closed below that level, the RSI would go below the 40.03 level that it needs to go below, and then that would be my signal to get out.
Gotcha. I just want to clarify for everybody who was listening along here in case they thought you just meant, it just dips below and then it dips and goes up and they go, Fibbo, you lied. What are you talking about? You're like, dude.
Oh, and that could happen. That happens a lot, actually. It actually will dip down and then it goes into a bear zone. And then the next thing you know, it closes back in the bull zone and then rallies on you. So that's why you got to kind of wait for the actual close and get that settlement to kind of filter out what's going on, basically, is what it does.
Gotcha.
But you definitely have to get the close on that. And I get people all the time. They'll message me. It's in the bear zone, and I'm like, we got about another hour and a half to go. We got just right now it is. And some people could depending on your risk tolerance, if it's something that you need to kind of put in and mitigate some of that risk, and it is going into the bear zone. Maybe you put a stop on the low or something, or half of your position. And there's different ways of playing it. I play the spot market. I don't do any leverage on crypto when it comes to my threshold theory. Now, sometimes I'll do some leverage and doing different things here and there, but when it comes to threshold theory, I do spot market. So to me, if it drops lower and it goes to 112, it's not the end of the world. It's not going to like liquidate me or anything. It's more. I just take a little bit more of a loss because I am relying on the settlement at the close of the day, which could go all the way down to 110 or whatever. But the thing is, the weird thing is it seems like a lot of risk, and sometimes it could smack you around a little bit. But when you look back historically, it really doesn't. Like your drawdowns on that are really not that bad. In the spot market, if you put leverage on it, it could really rip you a new one, But the spot market, I'm willing to take. For me, I'm willing to take the risk of a possible drop. But I like where we're at because the 61.8% level here at 113,342 is just above that threshold. So to me, you got some Fibonacci support there that even comes in on some of these other targets that were back here. So to me, I like that floor right now. So I'm kind of willing to take that risk and remain those 30% long, even though we're getting close to testing that bear zone.
And I'm glad you brought that up, though, man, because that's something I talk about all the time, which is this idea that if you want to have any kind of real success in trading, which we're talking about consistent profits over time, you absolutely have to focus on proper risk management and the system versus the single trade you're on. Most traders come in, and I think you'd agree with this because you talk to new traders all the time, as I do. But, most traders, and of course we were new at one time as well, we come in thinking about profit on a single trade right then, and that's all we're focused on. But what you find out when you are in the market for years and you're finally getting into a system works is you want to focus on that system and your results over time, because you're always going to have that single trade, which is going to do really well, or that single trade, which will do really crappy. But, the single trade itself doesn't make your trading career, and it shouldn't. It should be focused on that whole system, right? And so, again, that's something that I push all the time, when I'm teaching our students there at the academy. Which, by the way, folks, real quick here, while I'm thinking about it, I forgot to mention this. We're doing something nobody else does. I don't know if I've ever seen anybody else do this, but if you join our liquidity cartography cohort for the year, the annual, first of all, we've got 20. Well, we don't have 20 seats anymore. We got some people came in, but we have a total of 20 seats that we're putting. You can get in for half price. Use the code 2XTWOX. And not only that, but after 365 days, after you've been with us a year and you've put in the work, if you are not a measurably better trader, we'll give you double your money back. You have absolutely nothing to lose, everything to gain. That includes everything I teach, which is about how to find and source liquidity in markets, as well as Fibbo and his system. You get to learn his system. You get to get his trades all the time. You get the trades and analysis by our head traders, Vince and Andrew, as well. I do live trading 3 days a week in the mornings, which today, using the stuff that I talk about, and they see us trade, I scored 23.5 points on the S&P earlier.
Nice.
And so, we do that plus 3 times a week. We'll do live trainings as well. And then once again, you get Fibbo, you get access to Fibbo, his trades, you get to learn his system and all this. The goal of what we're trying to do here, folks, is we're trying to give you absolutely zero reason to become a better trader if you're serious about actually learning. If you're serious, because a lot of people come in and they say they're serious and they're not really. But if you are, you jump on that, you get half off for the year. And if you aren't a measurably better trader, you get double your money back. But that's because we believe really in what we do here, guys. No gimmicks. We've been in the market way too damn long. We don't talk about the same stuff, the same free retail information that you see out there all the time. Because again, if 95+% of retail traders lose money, and the free information out there is what most of them go after, well, I mean, you got to look at it and go, well, hell, maybe I shouldn't be doing the free stuff. What everybody's regurgitating out there. I should be looking for information that's different. And, again, Fibbo and I both come from that social mood background, where we understand markets as a product of social mood. And, it really aligns better, guys. It really sets you up better. So anyway, jump in there, while you have the chance. Once the 20 seats are full, that's it. We're going to try this out and see how this works. And go with it from there. But man, you can't beat half off plus double your money back.
Nope, I like it a lot.
Yeah. So.
And I mean, everything that's set up at TWC, that's why I like coming over there, because it has everything that anybody would want, like because not everybody's going to trade the same, right? So you got to you have different avenues you can look at. We have all the education, all that kind of stuff. I mean, and it's one of those, like, it's a pay it forward kind of thing. I love my community, and whenever people have questions or whatever, I'm there to help. And that's really what I want to do more than it. I'm actually enjoying that more than I am actually trading, because I've traded for so long. It's like you say before, it gets lonely. You just it's like trading is kind of lonely. But so when you have it in a community and you can help others, it actually just brings it to life. So you're like, all right, now we're trading and actually growing together. That kind of thing. So I enjoy it a lot. So I'm hoping that people get in there, because it'll be I mean, I'm not trying to sell it. I'm like, the community's awesome. The people in there are great. Yep. When I'm away, people are taking over for me, which I completely appreciate, because I got a lot of OGs in there that have been with me for. I've been with you, Chris, for a couple of years now.
God, it's hard to believe, isn't it?
Yeah. So, and then probably about 3 or 4 years prior to that, I was doing my own Telegram deal, and that's like, I got to move over with Chris, because that's a pretty cool deal. So I have guys that have been with me for 6 years, and they know my system probably as well as I do now. You know what I mean? It's like, so if I'm out and people are asking questions, they answer them. Like, this is how to do it, and this is what you do. And I think that's amazing. Not that, and the thing is, most of them are not mirroring exactly my stuff. They've adapted to their own thing and kind of take what I do and adapted it to what they do and make their whole new thing. And it's crazy. And I learned from them. I'm like, holy cow, I never looked at it that way, that kind of thing. So I think more heads together are better than one, so
absolutely. And you got more people finding, the right charts to be trading as well. So
yeah, that too.
Tens of thousands, hundreds of thousands of charts, even if you include crypto with futures and stocks and everything else. You can't possibly find all the great trades, but if you get more and more people in there that know what they're doing, and y'all are talking to each other in there in the group and everything, I mean, my God, you just find opportunities left and right. So
exactly.
I mean, if you guys want to join us over there, you're going to get basically 60 years of market experience between the both of us, plus other stuff in there and everything. And you can do it. Members.texaswestcapital.com. We'd absolutely love to have you in. Jump in there, say hi. Don't be afraid to, come out of your shell, say hi. You're going to find some really amazing people. Some of them are in the audience right now, watching in here, like Bernardo and Sats and Mark.
I see a lot of the names. Yeah, Sats McGee's in there. I see a bunch of them.
Yep.
All right.
We have fun, guys. What can we say? We love what we're doing.
Yeah, we try. Yeah, we try to have fun. Yeah, no, we have fun. All right. Just going over to the weekly real quick. I'm just kind of keeping an eye on this one. The way this was set up, we went. It's going to be hard to see. And I'll try to expand it, but there's a lot on this one too. The breakout to the upside here was above the 109,358, and then I had a target in here, which the next target was the 122,488, which hit because we hit a high of 123, and then we've been down the last couple of weeks. I mean, we were up last week, but didn't make new highs, so we've kind of come down a little bit. But when you look at the near-term fib here, and this is based off of there's a trend line here that broke, so I started at the trend line break. It's basically when this broke into a positive directional index and the momentum starting to get a positive move right here. So when you look at this is kind of where I start my fib on that break. So when you look at this one, you work your way up to the high here, the 38.2% level here is at 108.6. So if this wants to continue to come all the way back down to the 38.2% level at 108, that's going to be a really strong level because when the levels that we talked about on the 4 hour, if it broke down, the 108.7 is the 4 hour target to look for. And then on the daily, that one comes all the way down to 107.2, which is going to be right on this previous shallow fib right here on the 4 hour. So if you look at it all together, we're either going to go up and hold right here and then just head higher and get into some of these higher targets. Or if it wants to break that level and that level that I said that I'm going to take a stop at, and then I'd be buying it again at 108, the weekly would come down and test these previous highs. And then would, the previous high at 109, but the shallow fib is at 108.6. I could see that coming down there and then challenging that level and challenging that line in the sand I have on those other time frames. And then the next level is 144 on the weekly as a target to the upside. Now I don't trade the weekly, but I use it as guidance. So that 144 would be the target there, which could match up pretty well on some of the other targets on the other time frames. But given that there are some red flags that are here, based on you had this divergence here and all that kind of stuff. So you got some bearish divergence that's coming up in some of the time frames, but right now it's not enough to where the bears are building momentum. So in other words, the bullish structure to me is still relatively strong. I mean, the ADX right now on the weekly is at 28. Anything above a 25 on the indicator for me on the ADX, and the positive directional index is elevated, that the bulls are still in control. So any move to the downside, I'm going to lean toward buying interest is going to come back into the market to keep the trend going versus the other way of the sellers are going to come in and push through support because the momentum is still on a week over week basis, very structurally bullish. So even though we're correcting a little bit and it could correct to 108, I still like the movement to the upside, even if 108 got tested, which I'm hoping it doesn't. Because I kind of like the buy that we have right here, and hopefully we can get some momentum from that point.
Yeah,
but that's
real quick. Those that are maybe looking at different sorts of patterns or whatever, that is a descending wedge off that all-time high. So this pullback this morning kind of hit the bottom of that descending wedge as well. So the other things here, we've got Fibble in the way he's looking at it. So we've also got that, as well as he was saying I'd probably be interested around that 114. Yeah. So we have the.
Is that what you're talking about right there?
Yes, exactly. Yeah. And we've got the. Let me see here. What is it? It's the daily S1 pivot. Let me see there. Right around there. Right around that 114.555. So pretty close to what you were looking at as well.
Yeah, 114.255. So what's a couple $100 among friends,
There you go. Exactly, right? So I mean, the way that I look at it and the way Fibble look at it, we're both kind of, we're definitely enjoying this low we're at here, and no guarantees, obviously, but when you're coming into trading, you're looking for that confluence of things that happens around a level of support. And, those are the trades you take. I've talked about this recently on Twitter, and so those are the trades that you take. And even if they don't play out, there's never any guarantees in trading. And so you have to find the situations that are most likely to play out for you. And so that's what Fibble and I do. That's what we look for.
Exactly. All right, let me move on. Ethereum just hit a target too. Broke down into the bear zone. I did not buy this one, just because I just didn't.
That's it.
Well, I didn't have the order in. I mean, if it gets back down there, I could buy it. I just didn't have the limit order in like I had on some of the other stuff. But if you are looking at this and it went into the bear zone, this full retracement here after it broke the 61.8% level right here as it went into the bear zone, and then the momentum was building for the bears and it dropped the market right to the target. So if you were playing this, and some people in my group might have, the 3580.31 is that level. So if I was doing it, I probably would have rounded it up to 3580.5, kind of just above that low. But that target hit. So this one's hitting kind of along the lines of, the 4 hour on the BTC also hitting a target while in the bear zone. I typically, when things go into a bear zone and they work their way down to the target relatively easy like that, sometimes it depends on what it is, but like a lot of the shit coins and, Ethereum and all the rest, I like to go to the actual fib extension in a bear zone before I get back long. And I haven't really put a back test on that, but I just kind of do that for my own liking when it comes to a lot of the other markets that are a little bit thinner, I guess you would say, to where you got a chance of breaking down a lot more. Now, Ethereum's got a lot more volume than some of these other ones, but if you play it like that, this level over here at this low that falls just inside the fib extension level, to me, would be a more comfortable level to buy as it moves to the downside, or while you're in the bear zone. And then the stop would be, below the fib extension level there at 34.30. So that would be your risk, because if that ends up happening, you might get down to the 200%. But this is also a level that I'm watching. So the way I'm probably going to approach this is I'm probably going to put an order in here at the target to buy at this spot. And then what I normally do is buy 10% of whatever capital bucket it is. So if there's $10,000 in there, I'd buy $1,000 worth of the asset at this level. But instead, what I'm probably going to do is I'm going to probably buy half. I'll do 5% here and then do 5% here, because this 38.2% level is a previous shallow fib, just like on BTC. it's been alive for a long time and it hasn't broke down. So that's kind of the line in the sand for Ethereum, just like there's the line in the sand for BTC.
Yeah.
So to me, I'd rather be buying it closer to that and then stopping it out, because if that broke, then you're going to be all the way back down to pretty much 3K even at the 61.8% level. So that's the way I would approach this. But if you did buy here, it's just going to be like buying the 4 hour here, and hopefully working our way to the upside, because all I'm doing while we're in here is establishing some type of foundation while in the bear zone if it wants to continue to work higher into the upside. And with this previous shallow fib still holding as a really, really good support level, I do like the upside still based on what I'm seeing. And the same kind of thing, I'm not going to go through all the fibs, but you got this move to the upside and then you come back down. So this is the period of consolidation. So you got the move up, period of consolidation, and then it should do another follow through to the upside as long as this 33, 39 level holds. I don't even know if we'll get there. Hopefully we just buy here and it takes off from where we're at.
Right.
But I mean, momentum's with the bears, so I wouldn't be surprised for it to continue to drop a little bit. And that's why I kind of like this target a little better. Because as I've said before in a lot of shows, is that the fib extensions between the 127 and the 141%, to me is the line in that first line of defense. If it's going to reverse off the correction, that's going to be the zone that it should happen. And that's been back tested, and that works out pretty well. Now it doesn't happen every time, but probability is pretty high that when this comes down and makes the low below this point, which comes from these zones, that's where that extension comes from. So to me, that's going to be the first line of defense. So if I buy 5% there, and then it starts to head back up and gets back into a bull zone, I'll buy more and press the position, and then look for targets, just like I said on the 4 hour for the BTC.
I like it.
Now Ethereum on the daily is still in play and still in the bull zone. And I mean, we did hit a target in here and took some profit a while back. But I'm not in it anymore because I've been waiting for a move back down to the shallow fib. When it was over at this point right here, it dropped down to right this point, so it still didn't hit it, but it worked its way up and made another high. So now the shallow fib is sitting at 34.12, or actually 34.13 if you round up. So the shallow fib there is a buy for me. So 34.12 hits, 32.21 is the bear zone. So if this hits, it's still going to maintain the bullish zone. And if that gets filled, the next target is this trend line break objective at 41.14 or 44.14, where that is at. Now, another way to approach this, and I didn't do this, is whenever you get above 141% here, and this one was at 36.2795. Once you had 3 settles above it, you could have bought instead of waiting. Basically, if you want to keep continuing to ride the trend and it doesn't come back to hit the shallow fib, you can buy 3 settles above this, because this 141, the 141% at 36.27 now becomes support. And that's what's kind of being tested at the moment. So what was once resistance and then popped up, then it tested here as support, then went up and then tested again as support. So you could have bought it, 3 settles after, instead of waiting for the shallow fib. But I didn't trade it. I was just waiting for the shallow fib. So I was just being a little bit more, patient and conservative, I guess. But that's what I'm looking for. Little dip down there. And if that fills, then hopefully we get up to that target. But bull zone's still good. And that's why if you're doing this, if you're buying right here, it's really not too bad, because the daily is still bullish. So if we get all the way down to the 34.12 and you go back to the 4 hour here, 34.12 is going to put you down just underneath this 141. So it could come down here and wick into this zone and then start to pop up from there, just like it could hit this pot and start jumping up. So that's probably why I didn't buy. I can't remember. I've done so many charts, but because I don't know if I put an order in here because of this reason, because I was looking for the shallow fib on the daily, and the shallow fib on the daily comes really close to this target down in here. So that's why I think I was probably waiting. I just can't remember because I'm pretty sure that's why I didn't put the limit order in there. It's because the daily was still had a chance to get down to hit a little bit lower to get a little bit more market opportunity to the downside.
Yeah.
So that's Ethereum. Now let's go on to gold because this one absolutely kicked ass and I made a ton of money. All right, check this out. This is a weird thing that happened, but it's also tough because it is a futures contract and there are contract rollovers, and that's what we had here was a contract rollover. So this big ass gap right here was the contract rollover going from the one month to the next. And interesting thing here is with that rollover, it did push it into the bull zone. But this is the way I played it, was given that the rollover happened, and you don't normally see this right exactly at the time that it goes into a bull zone. There are different times of the years that you're going to get your futures contracts that have, larger spreads, like in the natural gas market coming out of winter in March and going into April for spring, you might have a huge gap rolling from one month to the next and those kind of things. So you had this one in gold, but it worked out pretty good because the way I wanted to do it was it basically when it broke this red candle to the downside right here, I bought 5% on this move to the downside. I think I got filled right inside this 127 to 141 zone because that's that first spot I wanted to see if it would hold, and it didn't. So I bought inside here, but then I had another limit right at the fill of the gap because I really wanted to see the gap fill pretty quickly based on the rollover, and that's exactly what happened. So I bought here, and then I bought again down here, and I got my 10%, which I think was I can't remember the exact number, but overall I was long here at about this level, and everything stayed in the bull zone even on this move to the downside here. Didn't break back into the bear zone, and then today it rallied up and hit the target that I had up here inside the 127 to 141 zone. Hit the target. I actually got out just a little bit before the target because the profit was just too daggone good. So I got out just a little bit earlier and took 51 points, which you guys could do the math. It was very, very good. But the went up and hit that part as a high, and then the shallow fib came in at 33.9640, which I got back in the market again just to get back in long. Now the long on this, the next target is not until basically testing the previous high up there at 34.52 is going to be where my take profit is on this long. Now there is going to be some risk on this one, so be careful because this is a futures market, and the bear zone is not until 32.98. So you're looking at a lot of movement to the downside. So I probably won't be doing that because I'll probably be getting out in the next hour and 11 minutes because I don't like taking too much of a position over a weekend in the futures markets. Now, if I have spot markets, I'll leave those go. But a lot of times if especially like this, I take 51 points of a gain and then I'm back in the market and I'm just trying to see if it would get another high just so I can get another little scalp before the end of the weekend.
Yep.
And that's what I was kind of playing. But right now I'm a little bit underwater, but I will be getting out before the weekend hits. But if I wasn't, and it was just like earlier in the week or we had more time, I would just kind of hold it and see what we can get on the movement to the upside. But I do like this latest candle because if you look at some of the trend, if you take the trend line right here on this break, and then you take, I know the pattern looks really weird, but with the contract rollover, it kind of messes things up. And someone asked me, I can't remember who it was, but somebody asked me about this would be just another target that you would get off the trend line break. I'm just drawing it in real quick. That would be right around roughly 34.76. And then if you also take the fib from the top here to the bottom, and it would be nice if I actually had some of the stuff in here. 127. Let's put the 2 in there like that. I just wanted to see where the extension was. So this actually hits before the extension, but this would be the next profit zone after that one. So you'd have a target here, and then a target up there if it wants to continue kind of stair-stepping up. But that's where we're at on that.
You can tell we're old school traders because we get really excited when we talk about futures. Even if we're doing well with crypto and everything, these people watching it may see us get more excited when we're talking about what we're doing with futures trading, right?
Yeah. I mean, that's futures has been my life. I mean, I've been started with cattle and grains, and now I'm in energy, and it's been futures markets my whole life. So I feel like I got a pretty good edge when it comes to commodities in futures. Just because that's what I've done a lot, but all the principles of TA or any kind of model that you put together when it comes to technical analysis works in any asset, exactly. In spot, futures, whatever. It just depends on how you approach certain things. But I think there is a slight edge if you know a market really well, like the energy market for me, since I've been in it for 20 years. Yes, I apply the technicals to it, but then if you really know the market and you can try to measure the psychology of how people are reading the supply and demand aspects of that commodity, that really helps too. Not that I follow the fundamentals, but after I do my technicals, I basically have a department that has the fundamental side, so I can say, hey, what are you guys thinking? And if they match, that's awesome. We're bullish, you're bullish, that's great.
Let's make money.
Probability is probably going to go up, or that it's going to go up. But it's when it doesn't, then you get a little bit of this arm wrestling match. But then that's when I don't even consider the fundamentals, and I just follow the market because that's what I know. So,
let me just kind of clarify here. You said you were in the grains and livestock.
Mm-hmm. That's where I started.
And now you're in energy, but isn't this really energy all over? Because grain-fed livestock produce a lot of methane. And so aren't you really just in gas and energy the whole time you've been trading?
Yep. That's what I'm going to say. I've been in the energy market for the full 26 years.
Just some from the back end of a cow, other from the other, what we generally call energy, right?
Well, and the front end of the cow too. They do burp. So you do get that too. No, but
I just wanted to point that out.
That's pretty good. Never really thought of the cattle and grains being the energy market.
Now you'll never forget it.
Yep, not now. But gold's looking good. Hopefully, we can get a nice green candle here and get me out positive on this. Let me get out of this here so you can see what I'm looking at. The shallow fib right now is at 33.9640. I was filled at 33.9650, and we're just underneath that. So hopefully we can get back up and touch some of these highs, because that would give me a little bit more profit. But if not, it's worth a try to scalp it. Yep. But the reason I like the 4 hour is also the daily. The daily here has been bullish for a while, and I really like this moving average too. It's tested it a few times, but hasn't had 3 consecutive settles underneath of it either. So, every time it's been touching this moving average, it's been getting pretty close to the bear zone. This one got really close as it tested underneath a couple of times. And then this one didn't even get as low as last time. There's a slight edge of a divergence there to where this one actually traded underneath the moving average a little bit more than it did here, but it didn't have the 3 settles. So all of this holding as a really decent support, and the bulls are trying to get back in control here. The ADX is low, but it's starting to lip back up. So you're starting to see some motion to the upside. It's early, but at least if you're holding support on the RSI, the moving average is hitting really nice. I like the support that's happening here. That's kind of why I went ahead and bought again, to see if we can get another push to the upside. Now I'm running out of time because the weekend's coming, but if I get out and it rallies up on Monday or whenever it opens on Sunday night, I'm not going to cry about it, because you can't do that. Once you get out, you got to just, I never used to do that, but now it's like, if I get out of a position, that whole thing's dead to me. I don't even care what happens.
There you go.
You just got to go on to the next one. I wasn't that way for many, many years. I was just like,
It's tough.
God dang it. If I would have just stayed in and would have had another 10% gain. But you just can't look at it that way, because that's when emotions start to rise. And you're just like, then the next time it comes to be, you're like, well, this time I'm staying in. And then that's when it just slaps you upside the head and you lose 10% doing it. But once you get out of a position, it should be dead to you. And then just go back to the drawing board, go back to the next. There's always something to trade. So don't marry a position. I used to do it a lot. I've learned so much ever since I said, I think it's probably ever since I read that book, The Art of Not Giving a Fuck. Have you ever seen that book?
Yeah, it's a great book.
Yeah. I mean, it's a simple book and it's an easy read, but it kind of made sense. It's like, I just don't care anymore. It's like, it's over. Like, I can't do anything about it. I'm out, I could always get back in.
You have no more control over anything in there. It's done.
Yeah, it's done.
Exactly.
But that's one of the reasons I bought in here, is because the daily on gold is rocking up pretty good. DXY, I don't trade, but I just kind of use it as a guide here. We went into the bull zone here. Now the ADX is still under 20, so it's not a lot of bullish momentum being made. But we went into the bull zone, but according to my system, it has to get 3 settles above the previous shallow fib to actually signal a bull. So yes, it's moving into the bull zone. So that what I categorize this as is a bullish correction in an overall bearish market.
Yeah.
So what this will happen is you should get selling interest around this shallow fib to keep us in the bear market. And so far, so this target that I have down here at 93.56 is still in play, because even though it went into the bull zone, this target's still in play. So if you're actually short this contract and playing it to the downside, you would still be short, even though it went into the bull zone here, because it never got up to the shallow fib and that target's still in play. So kind of a weird thing of what's happening in the dollar, but to me, it's not much. I'm still very, very bearish on this dollar.
I agree with you completely. I've been talking to everybody about that 3-wave rally off the swing low. That third wave is 100% almost exactly for the first wave. That's a classic corrective move. If it drops below the second wave there, which I don't know that I can really read on this small screen here, but
97.
Whatever the pullback is there on the rally off the swing low, that pullback low.
You're talking about right here, right?
Yeah.
97.
Yeah, so basically, as long as that high that we just made is in there and we drop below that low, again, you should be looking at that, below 95, 94, upper 93s area minimally. So, yeah, I agree 100% completely with what you're seeing there as well.
Yep. Yeah, it was interesting that it went into the bull zone, but not enough to give us a red flag that it's reversing.
Yeah.
SPY. This one I'm not doing because it's Friday and I'm just going to wait till next week. But we had this bull zone, been just kind of creeping its way all the way up. Hit the target of the 141% back here at 63.83. And I haven't been in it since. I've been waiting for the downside here. It went into the bear zone. But the previous shallow fib here at 62.82 or 62.87 has one settle and the second settle, and this is the 4-hour candle, but we only have an hour left. Well, actually, yeah, that does close for the weekend in an hour, right?
Yeah.
Yeah,
I think so. Yeah.
And then so we won't know until Sunday if this is going to get the next one, but it takes 3 settles on here to finalize the bear zone. And if that's the case, then this previous shallow fib that still hasn't been broken from this whole entire move to the upside is sort of that same kind of thing that we saw in BTC and Ethereum. we've been on these nice runs. But if it wants to correct back, it really has to break below this to really get it into a bearish market, or an overall bearish market. So for me, if it gets that third settle underneath this, that's where my buying target would be on a nice crash to the downside. Now, if you want to be a little bit more aggressive, you can buy the 61.8% level, which most likely will probably hold and go the other way. But if you want to be a little bit more conservative about it, you wait for a much, much larger correction to establish your floor and then start heading to the upside. But it still needs the 3 settles here to actually establish a bearish market. So if this actually gets back above the previous shallow fib, like it went down in the second one and then it goes back up on the third one, that actually might be a signal to buy. And you can go from there, because the RSI is getting down pretty low historically. When you look at these other previous shallow fib or previous lows on the RSI, went into bear zones, but never really got bearish. What I'm saying with that is this. Let me move it over here. But this previous shallow fib right here, when you rally up and you hit this as a high right here, and it went into the bear zone, it went down and touched the 38.2% level, but didn't break it. And that's why that's still. And then as you move up to highs and you keep moving all the way up, and you keep moving all the way up, and you keep moving all the way up, it's never broken. So that to me is a strong floor, just like the rest of it. So that's, to me, I'm more comfortable buying down close to this target while it's being bearish. But again, you can buy that third candle, and that price level is 62.87. So if we close this one and then we open up Sunday night and that first 4-hour candle closes above 62.87, I'll buy it to establish a long position going into next week, because that would be a really, really good support to hold while it's being tested and getting kind of oversold in this RSI condition. So we'll see what happens there. Daily, the bear zone right now is at 62.36, and the shallow fib is at 61.88. So the shallow fib is underneath this. So it would go into the bear zone by hitting the shallow fib. But again, you need 3 settles underneath to stop you. So to me, I want to buy this level at 61.88 on the daily, and then get that established, and then get some higher targets up here. 69.18 would be a target if I got bought there, but I'm out because the target that I had at this 61.8% level that fell right inside this zone that I was looking for hit almost to the penny, like kind of crazy. But now that hit and that target hit, I want to see the shallow fib hit. So that's where my buy is there. Moving on to some other stuff that I had. Since we're still in crypto, let me do XRP real quick. Or not crypto, but the stuff I normally look at. The XRP, when you look at it on the 4-hour, I'm still not down to the target that I want to get long XRP on, because we went into the bear zone here, and the shallow fib, it basically went into the bear zone, but it took a little bit for it to get 3 settles. It did not get 3 settles anywhere here, and it didn't get it here, but it did right here. So once you finally got out of this consolidation and it starts to work to the downside, this target at the 61.8% level is where I want to buy on the downside, or I buy if it establishes a new bull zone to the upside. So $2.75 is the target for XRP on the 4-hour on the downside, or I don't have the structure in here, but it's going to be most likely about $3.45 to get back into the bull zone. And then once that trend starts to establish, I'll get back long if it wants to go that route without filling that target first. But that's on the 4-hour. So, but the interesting thing is when you flip over to the daily right now, we went into the bull zone, went up, hit the target, took some profit. So this move right here was profit, and then we've been above it again. You could, if you wanted to establish a long after having 3 settles above this, the 141%, which was at $3.38, you could have bought it, but then the next target would be up here at just below $4. But then I didn't do that. I wanted to wait for the shallow fib. The shallow fib is what's been bought so far at 311. We are underneath of it at the moment, but we aren't in the bear zone. So my risk right now is at 311. If this gets down below 285, that's my risk, because if it hits below 285 and closes and goes into the bear zone, I will be out of that and I'll take my loss. And then I'll probably be looking for much lower pricing. But the interesting thing is the 4 hour, the 4 hours in the bear zone, and I'd like for it to get down into some areas to buy on a dip. And if this dips down a little bit further and still holds the bull zone, you got a couple areas that bring some support in the market overall. So bull zone on XRP, but definitely testing, getting there pretty close to this test. We'll have to see what happens, but I do like it. I mean, the break of this move right here was a break of this long trend line, which I took out because it was getting all cluttered. But the next target for me is really $4. I think it could get up to that $4 range, which matches nicely off of two things. We have this move to the upside, and you had a correction, then you had a move to the upside. So the 200% is at basically $4. But then you also look at the blue fibs here is off this previous bear zone, which already hit as a target. So what I had to do is I had to go back in history that something that's relatively close to this. So I took these highs back here, and then I looked at this extension off of this high, basically hitting my target here. Then you get this zone right here for the extension, and the top of that zone is at 399, and this one's at 399. So that's why my target is just below $4 off of this next buy. So if this holds, I think that $4 is going to get tested.
Yeah.
But then it would take the way I would approach this is if it got up to that $4, the shallow fib would be at 332. So if it wanted to get up to that point and come back down to that level, that 332, if you go back over here, it's really where the target was hit last time inside that zone. So that would be support. And then the next target would be up here at 498. Now, if we get up to this $4 and it doesn't correct back to this where the shallow fib would be, like I said before, you could do 3 settles above this, and then you got the high probability that the 200% would come into play. So if this actually rallies up and gets to 3 settles, you can buy it there, or you can go up and come back down and buy it as on a dip, and then go up to that almost $5 on the next move to the upside. So bullish on XRP on the daily, not so much on the 4 hours just yet, but I do like that it's trying to establish a position here, and maybe we start heading higher. Last two real quick. Coin.
Yep.
I'm waiting to see if it closes in 2 hours and 42 minutes into the bear zone. This is a good example, like we talked earlier. We are in the bear zone at the moment, but it hasn't settled yet. Most likely it'll probably stay there, but we'll have to see because it gapped down pretty nicely.
Yeah.
But again, if it goes into the bear zone here, it has to have 3 consecutive settles underneath the shallow fib if you want to take that risk. I have not bought back into this. The target hit nicely. It actually hit exactly where we wanted it to hit. You could have either done the extension or the trend measurement, or the trend line break measurement, or the extension. So anywhere between 425 and 444 was the target. So that target hit, and then we've been correcting since. So it worked very nicely. But now it gapped lower. Now it's kind of testing, and it'll probably bring a lot of fear into people. But we'll have to kind of see what happens here. I didn't buy it, and given it's the weekend, I'll see how it opens on Monday. If it opens on Monday, kind of back up, kind of fill in this gap a little bit, and it, even though it went into the bear zone, if it doesn't have the 3 settles, I'll probably end up buying it and get back in. But we'll have to wait. I'll have to wait till Monday to see what that looks like.
Well, real quick, I agree with you on the target there. I had a target at 420. Was it 428? So nice. Right there as well. And my pullback target, right now is potentially right around $300. And so right now we're kind of sitting at that 317.5 or so. So, again, kind of really watching it pretty much aligned the way I look at it, aligning a lot with what you're looking at right now as well.
Yep.
So yeah, I mean, I'm
No,
like
looks good.
that daily RSI is almost overbought, or I mean, almost oversold. Stochastic RSI is oversold. I mean, everything's aligning to potentially get a rally from around this area, $300, whatever, right around there. So I'm 100% there with you, man.
Awesome. I like the $300 level because when you look back on my previous zone, that first line of defense to see if it was going to hold was between 296 and 313.
Nice.
So when you take that, like what you're saying, that $300 level falls inside the zone. So this is kind of the zone. If you pull it over, this is the zone that I'm looking at for the buying interest to come back in, because this area in here is now support because it broke up and never came back. So this is going to be that first area of support. So that 300 that you're talking about falls in there very nicely in there. So if it gets down, like if it opens on Monday and we're down in this zone and we're in the bear zone, I might buy it in there, because then the third settle would just stop me out. And then it's a kind of a small risk reward ratio there. So I like that 300 that you're talking about. It falls into that support zone pretty nicely.
I like it when they align, man. Usually when your and mine analysis are aligning, usually it's a pretty good signal out there. So I like that.
And this zone comes from my start of my model. So it's not like, I don't know anyone else has taken a fib from this level, so it's like, I like that confluence of two different analyses that come together. I like it.
For sure.
All right. And then last, MSTR is just trying to get into that bear zone. And in this case, we are 3 settles underneath the shallow fib. So if you are long on this one and it does dip down into the bear zone in the next 2 hours and 38 minutes, by definition of the rule of the model is you get out and then just reestablish another time. In this case, just for kicks and giggles, if it was actually going to close right here and go into the bear zone, what I would do is I would be moving these fibs over, and let me show you real quick. I'll look at this like that, and what I would be looking for is that full retracement. So to me, if this ends up getting into the bear zone on the close, the buy for me is down there at 327 on the downside. So because we've already had the 3 settles underneath, we're already at the 61.8% level. So if it goes into the bear zone and it's right there, I don't want to buy that going into the bear zone. I'd rather get the full retracement, which is also from the breakout point going all the way back up and then retesting this area on the breakout of the trend line is pretty close to that. So I would like that area as a buy. And if that is a buy down there at 327, then that target that never got hit at 465, it got pretty daggone close, which is a shame that didn't happen, but it happens like that sometimes. But it's also the kind of thing, like if you're in front of it, you could have taken the profit if you were actually in front of it and trading it. But when you have a limit order and you're not watching it and it doesn't hit, then that happens too. But I do like that 327. And then if this holds as support, this trend line break would still be in play. And then that 558 is still kind of that longer term target that comes out. Now, if you look at it from basically MicroStrategy is BTC, if BTC wants to hold all the support that we're talking about and wants that next leg to the upside, I wouldn't see any reason for this dip to be bought and the next target at 558 for MicroStrategies as BTC starts to make its own new highs. So I don't see any reason why that wouldn't happen. But unless we break this lower support, and then that could be something that we need to really kind of look at, because that would be the same kind of condition of Bitcoin, breaking these levels down in here, down
there.
Yeah. Down here, if we're breaking this and MicroStrategies is breaking some really key support, that could be not a pretty picture. I don't think that's going to happen based on what's going on at the moment. Now, indicators and momentums and all those kind of and trends can change, but with the current picture, support is everything right now is still sentiment into buying into support and maintaining the bullish structure. I don't see anything that's kind of leaning the other way just yet. So I'm still kind of bullish in a lot of these markets. Just after this 8% drop that everybody's crying about.
This end of the world drop, right?
Yep, exactly. So that's what I got. I know I've been rambling for a long time, but
no, man, they appreciate it, man.
Just trying to kind of show you what I'm looking at.
Yeah, no, let me get us back over here. There we go. Yeah, so no, man, I like that a lot of what you're saying kind of running confluence with the way I'm looking at and what I've been talking to our students about as well. Awesome. And I think, man, it's one of the really great things that, you get there if you're part of the whole, TWC coaching experience, is that you get access, and not only just to you and me, but also to Andrew and also to Vince. Yep. And so we're covering everything with all the different things we do. We're covering everything from the 15-second 1-minute charts when I do with the live trading, to the day trading, to the larger swing trading, to more of the investing, because you and I often talk about our much larger targets as well, cycle targets, stuff like that. Yep. And then again, with Andrew and Vince and the way they're trading on the shorter time frames and the mid time frames as well. So, you kind of get a lot of experience, a lot of exposure to different ways of looking at it. And when you start seeing, us all talking maybe about the same kind of asset, and we're all kind of talking about the same areas, I mean, you go, man, it's not just one person. You got multiple people looking at it here.
And Andrew and Vince are awesome too. And it's great because they approach completely different than we do. And they're both different at what they look at. So getting so many different ways of looking at things. So, when you look at things, you're like, hey, that kind of Andrew's stuff kind of fits the way I like to look at things, so you kind of look at him and say, hey, what can I learn from him? And I'm sure Andrew can learn off of anybody that's with him too. So,
I mean, that's the whole goal.
That's what I like about it. Four different types of traders in one house is good. And if they, like you said, if they all start to match up together, whew, that could get pretty. Really that could,
attention, right?
That'd be really fun, to be honest.
At that point, it just takes one of those trades, pays for everything for the year. Depending on how big size you're going in, and then life's great after that, right?
Yep. I would like to have a couple more of those kind of trades. I haven't had those in a while.
Because
a lot of my stuff is
on his gold trade.
You what now?
I said Mr. 50 somewhat points on his gold trade.
Oh yeah, no, that's good, but that's not like I can take the month off or anything like that. But
you could take a Saturday off, maybe.
Yeah, that's true. That's true. But no, I just like I don't know. It's like, but the way I have my system built is more just following the system and getting smaller percentages over time. Every once in a while you get to rock out a really good one, but my system's not built to get that trade that you can just say, hey, yeah, I can just take off the next month. But there are other ways of trading that I do that's away from threshold theory too, that I kind of do on my own. And that's when I'll start to get like a futures contract, goes up, way higher than you thought and you were in it. It was like, woo, that stuff. But again, disclaimer, it could go the other way.
Exactly.
And that futures market could make you cry for about a month straight.
Yeah. If you're not careful. Exactly. Yeah, and and it's, even with what we're doing here, speaking of futures, again, I had that, that in like less than 9 minutes, I had that 23.5 points.
That's a lot in 9 minutes
today. But for full transparency here, that wasn't actually my account. Unfortunately, I was talking to Phil about this before. I could have gotten a lot more, but what I do with the live trading is I use eval accounts, right? With these prop forms, I've perhaps like 5 of them in the last few months, with our traders. So I kind of talk about, because, a lot of times traders come in like, well, I don't have enough money. And so that emotionally, they end up taking more risk than they need to. Yep. And so one way around that is if you can get access to more capital, and we can do that through prop trading. So I get in there and I discuss this with them. Listen, here's how we trade this. And I show them we're trading prop accounts here. This is how you pass the eval. And so I started this new one with Top Step. Top Step is about as legit as you get. They're what's the word?
They're backed by the CFTC.
Well, not backed, but
not backed, but regulated by them.
Regulated. Thank you. Yeah, by the CFTC and all that. Legit, and it's it's not too much each month as you get in there and do it, and their rules are pretty simple. And so I've started one of the account this week here, but today one of the rules in the eval or in what they call the combine is that your one single trade can't be greater than 50% of your overall profit target. So I've got a $50,000 account I'm using on there, which means I can't make more than $1,500 in a day. Because if I do, it doesn't disqualify me, but it means on average, I have to have more trades, more daily, stuff coming in beyond the $3,000 profit target to pass the combine. So I had to stop it at like that 127 area, 127 percent extension area, because that was like $1,300 because I was running 10 contracts on that with the micro E minis. And so so it was $1,312.75. I'm looking at the account here. And, so I had to stop it there, but it actually hit where I was looking for it to hit, which was a really great thing. I mean, it was just absolute perfect 161.8, 100%, 200% movement. But, I had to stop it where it was. I couldn't do it because of the rules. And, these are things we discuss, not just how do you trade in real time, on the 15-second or the 1 minute time frame, but how do you get in that trade? I got in 6 points off the low. How do you get in at 6 points off the low? If you're in Bitcoin, the pullback we had the other day here, the first pullback I think we had here at, what was it? Oh, back over here. I guess that was last Friday at that 114 area.
114,750. Yeah.
And so obviously that was, well, where was the Wednesday trade? No, where was the Wednesday? Anyway, I was doing I was doing a trade.
The low right there was at 115,728 on Wednesday.
Yeah,
it was a dip before we went up a little higher, and then we went lower after that.
Yeah, and so for that, I went right into the we on Wednesdays I do the price actions training session. I went in there and I actually dissected how do you get in at around $200 above that swing low. And your target initially is going to be that descending resistance. And so, I go in there, I'm showing them, this is how you do this. And hopefully they use that information here with these couple of lows that we've had here since yesterday and into today, because you've had $1,500 to $1,800 of upside movement three different times already. And if you're awake when those are happening, obviously, the other one's 3 o'clock in the morning, too early for me. I'm not awake, but you have the opportunity to get in there and to make some shorter term trades, with that knowledge, with that understanding of how do you approach it, how do you get in there with that trade? And man, it's just been really a great thing to kind of do with them. I'm glad we're getting a little bit more movement, a little bit more opportunity, because it's not just enough. You basically said this earlier. It's not just enough to understand how to read the market or what's going on there. You have to understand, how do I enter? When do I enter? And so like you were talking about the trades you didn't take because of X, Y, and Z, so you read the market and then you said, okay, yeah, that you could take this here, but you chose not to take it there and to look for this other entry, and you're explaining why. And again, I think that's one of the biggest things that a lot of retail traders miss, when they're out there. Even if they start learning, okay, well, this is how you read it. Well, okay, well, that's great, but how do you actually enter? How do you actually trade it? That's the thing, right? You can kind of get that really separates, just your average trader from your really great traders.
Yeah. And I think that comes with experience and just practicing and getting some time under your belt. I think that those decisions will be easier over time, I think. Yeah. At least it was for me. But one thing you mentioned earlier, it's kind of funny because you talked about the prop firm and you're saying people that don't have enough money to trade, and they make bad decisions. One thing I always used to say is don't trade with scared money. Yeah. Because like if you're in the market and you have any sense of like, I need to get at least 3 or 4% on this, or the market's going against you and you get all heated up because you're starting to get underneath what you don't want to lose or you can't lose, that's when those bad decisions come into play. But that I can see the benefit of getting into a prop firm, being able to have the money to trade, and it takes that stress or emotion off of what I call scared money.
Yes.
And then that helps you reduce the emotion and helps you focus more on the model or strategy or whatever you have in place. Because if you have a strategy in place or whatever, and you're playing with money that you need to make a profit, you're going to lose.
Money, right?
You're going to end up losing for sure.
Yeah. I'm so glad you said that, man.
You will. 99% chance you're going to lose.
Absolutely. I mean,
because you're gonna buy into losing positions.
Yeah.
You're gonna do things that you wouldn't normally do, and that's not good.
Yeah, because
we've all been there.
See, we can say this because even though we've been doing this for a few decades each, you still remember anybody that's sitting here trading, 20, 30 years later, 40 years later, they still remember when they began and the mistakes they made and how bad some of those losses really hit you emotionally.
Oh yeah. They're trauma events in your life.
Yeah.
You're going to remember them.
For sure.
Just like if you got in a car accident when you were young, you're going to remember that car accident.
That's right. That's right. And so it's important to learn from those, right? When it comes to trading, focus on that risk management. And that way, the mistakes you're going to make, because you will make mistakes, the bad trades you're going to make because you will make bad trades. And not because you just did terrible. As I said earlier, there are trades you take, folks, and whether they are profitable or not, they're still the trades you take because there are no guarantees. If there were guarantees, those are the trades you take, and that's it. Yeah. You always win. But there's no such.
And everybody would do it.
Yeah, exactly. Everybody do it. Everybody be profitable, right? But that's what Fibbo and I do here, man. We really work to help you guys understand what's going on with markets and, how do markets really work? Not all the nonsense that you see online, not all the BS. Most of what you guys are seeing online is half truths and outright lies. And not because people are trying to be rude to you or trying to, dupe you, but because, again, those of us that have been in for, tens of years, decades, you see it over and over again. The same stuff you guys first come in, you go, oh my God, and it seems so eye-opening. And it's that everybody's regurgitating nowadays, social media, big accounts, they all kind of regurgitate it. It's the same stuff that was regurgitated when we came in and didn't work back then. Or worked very rarely back then. You have to understand it fully to apply it properly.
Yep.
These are all the things that you guys, unfortunately, when you're out there and you're trying to learn on your own, trying to get out there, these are the things that you kind of run into, the issues that you run into with it, which is why we do what we do. I mean, honestly, at the end of the day, Fibbo said it great earlier. You basically get more out of helping somebody else learn than you even do out of trading yourself. And I think, is that big nonsense saying out there that those who can do and those that can't teach. I think it's absolute nonsense. The one thing I've noticed, not just in trading and in my own personal life and in other things, is those who become really good at something usually tend to go out and teach others. And there's because you get a certain thing inside of you, something inside of you. Because for trading, if you learn from Fibbo and you do better than Fibbo's ever done, that does not affect his trading one bit. But man, he can walk around chest out, head high saying, man, I helped them figure it out. And that is absolutely the best feeling in the world, guys. I'm going to tell you right now.
Yep.
A lot of silly stuff out there, a lot of stuff that people blindly kind of subscribe to and or ascribe to and believe and whatnot. And then, when you're in the trenches long enough, you kind of get out there and you go, man, that's so much BS. Hopefully I can help one other person not fall into that trap along the way. But yeah, so we love what we do, man. I'll tell you what, we'd love for you guys to join us at members.texaswestcapital.com. And if you want to take advantage of the full program, you can go in just with Fibbo's there. He's got his thing there. You can join just with his. If you want to go with the full experience, though, the coaching, the live trading, all that kind of stuff with me, and the trainings every week and all that. If you join the annual, you can use TWOT so 2X, as your promo code on the annual for the Liquidity cartography cohort. Look at that, I said it. And not only going to get half off for the next year, but if you're not a measurably better trader at the end of the year, guess what? You can request a 2 times your money back guarantee. And nobody does that, guys. Nobody does that. But what you're going to learn with us, with me, with Fibbo, and everything else that's going on in there is so great. We believe in it so much that we're willing to do that. So, but there's only 20 seats. Well, there was 20 seats available when we launched it. Some people have already joined. But once those 20 seats are fully gone, you won't have that opportunity for the half off and the 2 times money back guarantee there. So if you're serious about trading, legit serious, and you're willing to put in the work and the effort and, and learn, you got absolutely nothing to lose. So hopefully we'll see you in there. We would love to see you, but if not, keep following us on social media. We'd love to have you following us as well. Right.
Yep. And most likely if people take that deal, I think it will produce OGs that will be around for a long time. Exactly. I mean, that's what's happened in the past for me. And I can still see that happening because the community is great and all that. And people, I don't know, there's that. I know there's a lot of other places to go, but it's like, it's really all about community. So if you go into somewhere and they have a shitty community, you'll know really fast.
Exactly.
You'll realize it. And I've been in some of those, and it's just like, damn, they don't treat you very nice there, that kind of thing. But no, I like it. I like that deal that you're doing, and it goes to show that we have confidence in what we do. It's not like we did this deal when we've only been trading for a year.
We were only trading a year 25, 30 years ago. Right?
Yeah. No, that's awesome. And I would almost bet that at least one person out of that 20 is going to be an OG and be with us for years.
Oh, at least. So, there's just no way they can if they're serious about it. But again, it all depends on how serious you are,
Yeah, you got to put in the work. I mean, to be honest with you, for the cost of it, if you do put in the work, you should have a couple of trades that should pay for the entire thing.
Oh, absolutely. During that year. Yeah.
Absolutely. That's what it kind of comes down to, really.
I'll tell you, Vince has been having some of them shorter term trades been really popping out. Andrew's been having some midterm, more swing trades. He's been knocking out some great pullbacks, getting people ready for the move. So
I still think that Andrew's a cyborg. I really don't understand how in the heck he can pump out as much information as he does.
He really does. He's
awesome at it. I'm like, holy cow, dude. I believe that he is under the realm of Elon Musk, and he's a cyborg that can pump out charts in seconds.
Hey man, that's what we do, right? That's what we love out there. We love to get these guys out there and get them involved.
No, I think he's awesome. I admire that he could do what he does.
Oh man, absolutely. But anyway, so hey man, listen, I appreciate you joining in today.
You bet.
We'll try, guys, as always, we will try to pencil Mr. Fibaswani here in 2 weeks. And we'll see, if he can do it. It's all really dependent on his schedule. He's been really hectic at his day job there, trading for that energy company for the past few months. It's just been kind of hectic time.
Yeah, just a lot of projects going on. But the next 2 weeks, I will be around in 2 weeks Friday. So that Friday I don't have anything going on, so I should be good on that Friday.
Yet. Yeah,
but I can pencil it in. I'll get it booked.
There you go. We'll get it booked, man. So there you go. We'll have Mr. Fibaswani back here in 2 weeks, not next week, in 2 weeks. Make sure y'all are following him on X there, just as he's got it written there, at FIBOSWANNY. And
by the time we meet again, hopefully in 2 weeks, we'll be at least 125K.
Oh, that'd be nice.
Maybe. I don't know. Actually, August isn't the best month historically, but we'll have to see how it goes.
Yeah, well, but then again, summers are usually pretty, meh, and it's been a good summer.
Yeah, it hasn't been a meh summer at all.
It wasn't a sell in May and go away this year. No, not at all.
Nope. Yeah, those old adages are starting to fade into the distance as the new financial world is starting.
Well, yeah, and before we jump off here, I mean, since you're bringing that up, man, oh man, dude, you've got to be seeing it coming, just like me. 24-hour trading is going to be here across all markets pretty soon.
That'll change everything.
Yeah, all of a sudden, the way things were done prior, now you've got the weekend events that'll be moving the stock market. And of course, it's always knee-jerk reactionary, but nonetheless, depending if you're trading shorter time, people are just not going to get to sleep anymore, man. Crypto was getting ready for it. Crypto was getting them ready for it, and here we go, mainstream.
Oh, I don't doubt it. I wouldn't be surprised. I'm surprised that it hasn't happened already, to be honest.
It's coming.
I thought it would be here already, but it'll be here for sure. Yeah. I mean, to be honest, I've never understood why they didn't do that, because they could make so much more money.
And it's all about
yeah, they would make so much more money just having 2 more days open.
You know why it was? Because the guys that actually are working, don't want to have to think about the market on the weekend.
Yeah,
they want to go to they want to go to the Hamptons or whatever on the weekend.
Yeah,
during the summer and not worry about it, right?
Yeah. Well, too bad. Start taking some Adderall or something.
There you go.
No, I'm not promoting that. I'm just kidding.
You heard it here, folks. You heard it here.
No, it was a joke.
All right. Hey, listen. As always, remember, the only thing you control is how much you lose. I hope you guys have enjoyed the time with us. We really enjoy doing this. We really appreciate you guys showing up and wanting to listen and learn a bit, because that's what we do, right? So 2 weeks from now, Fib will be back here. Same TA time, same TA channel. I don't want to say the other thing.
I was thinking bat time, bat channel.
But other than that, guys, remember, I do also do on Wednesdays, Beards and Bitcoin, with Andrew and Tillman from different Andrew and Tillman from Arch Public, another couple of good friends of mine. So same time, same place. So be sure you show up there as well.
Yeah, that's another great show. Definitely watch it, because they touch on everything.
Well, we try to anyway, right? Really kind of on the financial side, it's financialization of Bitcoin.
Yeah.
But
and I always like going in there and just like pissing with you guys. But it's fun. But no, it's a good show. You guys cover a lot of good stuff, and the comedy that you get from those guys is pretty funny too.
Hey man, they're great guys. It's so much fun to just chill out with them and hang out with them and talk Bitcoin and markets for an hour each week. So but anyway,
I'm still trying to get together with Andrew sometime. We've been trying to get together for dinner or something, because he's only an hour away from me.
That's right. He's right up there by you, isn't he? That's right.
Yeah, he's pretty close.
Yeah, you got to get that. You got to get that happen. Then we need pictures, or it didn't happen.
We'll get pictures.
All right, listen.
All right.
Hey, everybody, y'all have a great weekend. Trade safe out there. What is it the kids say these days? Touch grass.
Go out and touch grass.
You got it. You can't sit there and stare at the charts 24/7, guys. That stress will build up in the back of your head. And unbeknownst to you, you're going to be making decisions based on that emotion and that stress, and those never come out well. So you got to get some time away from the charts. The markets will be there. Like Fibbo said, there's always something to trade. So there you go.
Much.
All right. Listen, we'll catch you back in TWC, man. And hopefully we'll have some people joining up there and saying hi. Be sure to say hi, guys. We want to know you're there. We want to be excited to have you there and help you get going. So definitely say hi. And other than that, just have a great weekend. Fibbo, thank you so much, bud.
All right, you bet. See you, Chris.
All right, everybody else, take care. We'll see you next time.